Thank you to both of you for appearing. Couple quick things, and I do have one question for both of you. Chairman Powell, I saw with great interest your comments on a cryptocurrency out of the Fed. You said we would not proceed without support from Congress and urged great care and transparency. I appreciate that. I think my subcommittee would probably have jurisdiction over that in some combination with Mr. Sherman's subcommittee. So I just wanted to tip my hat to that sentiment. I think we should work together. There's quite a bit of education, I think, to be done with the United States Congress on that very important topic. Secretary Yellen, thank you for all the work that you and your people have done. I would be remiss if I didn't urge you to be particularly quick on the rollout of the rules for the Restaurant Revitalization Fund. That obviously is a sector that has been brutally hit in the last year or so. So we're hoping that those funds become available quickly. In my remaining 4 minutes, I have one question for both of you that I'd like to offer. It's undeniable that everywhere we look today, we see the effects of the very substantial liquidity in the system. And by the way, it's gratifying to see monetary and fiscal policy working in tandem. This was not true when I was a freshman in 2009, when the fiscal policy was working against the monetary policy for recovery. It's very gratifying to see that. But again, everywhere we look, we see the effects of a flood of liquidity in the system. That, of course, is in equity market prices, which have had a remarkable run, the high yield market, which is now yielding something like 4%. Everybody and their brother has a SPAC, real estate prices very, growing around the country. So my question for both of you, and let me ask you each to take 1.5 to 2 minutes. We learned in 2008 that trees do not grow to the sky. So I wonder if you each would just take 90 seconds to tell us what you see as the near to medium term risks associated with the inevitable contraction, though we may not know when it comes, of liquidity in the system. Let me start with the Treasury Secretary for a response, and then go to the chairman. Secretary Yellen, you may need to unmute.
Apologies. I'd say that while asset valuations are elevated by historical metrics, there's also belief that with vaccinations proceeding at a rapid pace, that the economy will be able to get back on track. I think in an environment where asset prices are high, that what's important is for regulators to make sure that the financial sector is resilient and to make sure that markets work well and that financial institutions are appropriately managing their risks.
Chairman Powell, that's a pretty good segue. Over to you.
So monetary policy is highly accommodative right now. That is appropriate given how far we are from our employment goal and our inflation goal, for that matter. I think the first thing I would point to is just our overall monitoring of financial stability. So we look carefully at financial stability on an ongoing basis. We have a framework with 4 pillars. If you look at those, the evidence is kind of mixed. You can say that asset prices are somewhat, some asset prices are a bit high, but the banking system is highly capitalized, and funding risk is relatively modest. The remaining category is really leverage among households and businesses, which is somewhat elevated, but nothing like it was before the financial crisis. So it's a mixed picture on that. The main thing is to have a resilient financial sector that can withstand the sorts of disruptions that will come. In terms of moving forward, we've said that we would start to taper our asset purchases when we've seen substantial further progress toward our goals. When that comes, we'll communicate well in advance of the time of actually tapering. That's what we do. We've learned over the course of some years now that we need to communicate carefully and move slowly, well ahead of time. We will let people know what's coming, and that's the best we can do to make sure that the transition away from very highly accommodative monetary policy as the economy reaches full employment and price stability goals, that will transition to a different policy.
Thank you. The
Madam.
gentleman's time has expired.
Shepard Smith here. Thanks for watching CNBC on YouTube.